Hello, this is Trent Chapman with the shortsalegenius.com, and I want to share with you today some things that I've seen recently with Fannie Mae and something else with Freddie Mac as well. But to start with, I got an email and it was kind of interesting. It's about REOs. Now I'm going to relate this to short sales as well, so stay with me. In this case, an REO listing I saw, it has comments in there, confidence remarks about the listing. It stated that this home had previously been listed with a reverse mortgage. Now what this means is that the prior owner that lost the home to foreclosure had a reverse mortgage on that house. Now in the remarks there, it states that Fannie Mae, as part of a new rule or new regulation with Fannie Mae and REOs, would only take a full market value offer, so at list price or above, won't offer concessions for closing costs, won't pay for home warranty or inspection. Now this is what I find kind of confusing. How does the previous mortgage change the value of the collateral? Now let's say we're going to a different market altogether. Let's say I'm looking for a car. I want to buy a car. I'm buying a used car. It's a couple years old. And I go to this car lot. They sell the exact same cars, same models. And I look and say, okay, well here's one. It's worth $20,000 per Kelley Blue Book. And the one right next to it, same exact thing, same upgrades, just a different color. And also it's worth $20,000 per Kelley Blue Book. Now, if I were to go to the car dealership and they told me, well, this black one, this one right here, this is $22,000, and the silver one right here, we'll let it go for $19,000 or $18,000. But they're the exact same car, the only difference is the color. Now that wouldn't make any sense. So I asked them, well, why is there a difference or discrepancy in the price of these cars? And they told me, well, this black car right here, this owner had a loan on it, and so we have to get more for this car. Whereas the silver one, they paid cash before they sold it to us, so we're not worried about getting, whatever the market value is for the car. Now that wouldn't make sense, would it, in the car world? It doesn't make sense in the real estate world either. The value of the property is the value of the property. The previous mortgage type does not affect the collateral value. So when banks and when these entities come up with these rules, I kind of laugh. And the same thing happens with short sales. In the short sale world, I've heard this many times where I'm talking to a negotiator about the price or the value of a property, and they tell us, well, the BPO came in at X, but we're wanting more money because we have such a high loss on this transaction. So it might come in at $400,000 BPO, but they're asking for $430,000. And the reason being, because it's extremely high loss. Now let's take a step back, let's think again. How does the bank's loss equate to a higher purchase price? It doesn't. It makes no sense whatsoever. But banks will ask for weird things because they have weird guidelines that someone came up with. But at the end of the day, they'll take $400,000 or less for that same piece of property if the value came in at $400,000. That's a true fair market value. They'll ask for $420,000, $430,000 and give you excuses like, well, that's what our investor wants because we're taking such a big hit on this one. It doesn't matter. The collateral value is the collateral value. So hopefully when you guys look at real estate and you see the things that banks come up with, you won't get sucked into believing that it's actual truth or that they're going to stick by that. At the end of the day, logic wins. If the value of the property is $400,000, they'll take less than $400,000 even. They won't stick to their guns at saying we want $420,000, $430,000 when the value of the property is sufficiently less. The problem is most of us give up before we talk to the right person who has the authority to adjust or go around the guidelines. So keep that in mind when you're dealing with your Fannie Mae REOs purchases or when you're dealing with short sales and they're trying to tell you that because of our extremely high loss, we cannot go below X amount of dollars, even though the fair market value is lower. Now, the other thing I want to talk to you about is Fannie Mae and Freddie Mac. Previously, when you did a forbearance, let's say a homeowner wants to stay in the home and they just lost their job, Fannie Mae and Freddie Mac will allow 6-month forbearance, meaning they don't have to pay payments for 6 months, hoping that they would find another job. Now, the guidelines are that they have to have 12 months of cash reserves in order to qualify, or less. They can't have more. So if I have, for example, a payment of $2,000 a month, I have to have less than $24,000 in savings and have lost my job in order to qualify. On the other side, I've also got to qualify based on my debt-to-income ratio. My mortgage expense or housing expense has to be less than 31% of my current income now that I lost my employment. Say I have a spouse that's working, then the spouse's income cannot be too high, or otherwise I can't qualify for forbearance either. Now the forbearance has been changed with Freddie Mac and Fannie Mae, starting in February with Freddie Mac and starting in March with Fannie Mae, that they'll now allow up to 12-month forbearance for homeowners who have lost their job, who the gross income now is low enough to where their housing expense is greater than 31% of their gross income, and also who have less than 12 months of reserves. So that's something for the homeowners that want to stay a little bit longer and look at their other options or try and get a job before they do a short sale, lose their home to foreclosure. So hopefully you guys will help your homeowners to understand their options, help them to understand what's best for them, and also going back to the first thing we talked about, Don't get stuck or hung up on the banks asking for something more than fair market value. At the end of the day, logic wins and the home will sell for fair market value. Go ahead and comment down below. This is Trent Chapman with Short Sale Genius. Talk to you guys soon.